Welcome back to Halftime Report on CNBC TV18. Just a quick word on the market. It's still down, but the low point of trade right now, but 17,400 is not breaking, at least as of now. There's quite a bit of pressure in the Bank Nifty. The Bank Nifty is down almost 1,000 points as we speak. IndusInd, HDFC Bank, HDFC, Axis Bank are all under pressure right now. So do keep an eye out on that. Of course, the entire IT space is in focus after Accenture's guidance that came out. Sandip Agarwal, who tracks IT at Edelweiss, joins us now to talk more about that. Sandip, welcome to the show. How would you read into the moderation in the guidance? I mean, it's quite significant, right? 8 to 11% now versus a 26% growth of last year. Is Accenture just being conservative because of what is perhaps to come, the impending recession? And what would your read-through be for the large cap IT space?
Yeah, thanks, Sonia, for being me on the show. Two things. If you see Accenture past track record, they always underguide by 4 to 5% on average. So if you see last year 26, the guidance was much lower than that. So that is number one. Number two, we always go by what are the internals of the numbers. So if you see the internals of the number, and we have been saying this several times in last 2 years that directly correlating the GDP growth rate doesn't help, because outsourcing is the last one to get cut. So if you see Europe economy, while is not doing so great, but if you see growth for Accenture in Europe has been superb, and they are seeing growth from all markets. So we have to see everything in perspective. Technology is no more a operational efficiency or cost takeout function. It is more of a revenue driving function, profitability driving function, and secondly, it is core to the business. So I think, we should not simply take growth of guidance of Accenture. I also have to remember that last year was an exceptional year where, prior to that year, there was a base effect as well, which we will not get that benefit this year. And obviously, because of that, if you see the estimates for Edelweiss or for anyone else is lower than the previous year, obviously, because that was one-off year. But will the industry do extremely well for the next 2-3 years? That call remains there. So I don't have any doubt, and I don't read anything negative in the numbers. I think it is a good number, good guidance, and there is a lot of optimism which is there. Obviously, optimism is with little caution, because they also need to see how things pan out on the economic front in the largest market, that is US.
Sandeep, I wanted to digress a little bit from Accenture and ask you about Europe. It's around 25% of total sales of the bigger IT companies. Now, with the fact that there are these recession headwinds, the Bank of England already said that they think they're already in a recession, and this higher interest rate environment that we're already working in. Are you factoring that in terms of your numbers? How much of a slowdown do you expect, impact do you expect on numbers?
So see, there are two things. When we have interacted recently to the banking sector, what we have come to know that, in fact, for most of the tech companies, the banking segment is doing quite well. Where we are seeing pressure of recession or some hint of that is on the retail side, which you would have seen that all the global retailers have brought down their guidance or the outlook to some extent. So that is where there is some pressure. There is no denial about it. But otherwise, other than retail, we are not seeing any signs of pressure anywhere. And in fact, banking is doing better than expected. So from overall growth perspective, I think we are not yet building in any decline in growth. We are still believing that 13 to 15% kind of growth for most of the good quality large and mid cap should be there. So we believe that HCL or a Infosys or a TCS should be in that range of 13 to 15% kind of growth, and the good quality mid caps like Mindtree, LTI, Coforge, they should be between 18 to 22% kind of growth. We don't see material risk in those numbers, because one, hyperscaler continues to spend a lot of money, and second, demand environment is quite robust. So we are not seeing any signs of any weakness from the banking side as well in any of the companies as of now.
Right. Sandeep, back in the day, we would see strong inverse correlation with the rupee and the IT stocks. The weaker the rupee got, the stronger the IT stocks went as well. But that seems to have changed over the last few years as companies get more diversified in their services, etc. Just wanted to understand from an Accenture perspective, what areas of Accenture do we have major overlaps with in Indian companies? And to that extent, how do you read these numbers for specific companies in India?
So see, 50%, almost 52% of the book is outsourcing, which is apple to apple comparable with Indian IT. And if you see in that book, the interesting thing in the guidance, if you do a detailed research of what they are saying, is that they are guiding for double-digit growth confidently in the outsourcing piece and a low double-digit or a high single-digit in the consulting. So that is very, very interesting, and that is very positive for Indian IT. That is the way we read. So the overlap is in 50% of Accenture's business, which is the outsourcing piece, and in consulting, probably we have a 5 to 10% overlap, not more than that.
Okay. I just have to ask you what one should be doing with Infosys now. It's becoming very hard to keep the faith, right, with the way Infosys is moving. I mean, fresh 52-week low. But to be fair, the company is very confident of holding on to their FY23 revenue guidance of 14 to 16%. So what's the way forward now for an investor who perhaps is holding the stock?
So see, the point is that, 14 to 16% is something which people have not built in for Infosys. So the built-in is for 18 to 20%. So, if they do 14 to 16 and for this year, then probably, the stock can't be at 1650, 1700. It has to be at 1400 odd level. So that is where the market is pricing in. And secondly, market is also worried about how they will guide for the next year. So if you see Accenture, for example, they have guide down by 4% on an average versus their guidance last year. And so last year, if you see, they have outperformed, they have overshot their guidance by almost 10% in actuals. Same thing we are seeing in Infosys for last year, what they guided and where they ended this year also. We are seeing some increase they have done. But the question which investors have in mind, what will they guide for FY23? So if they end up at doing 16%, then obviously, they will not guide more than 11, 12% for the next year. And that is what the worry is today. And secondly, I think, on attrition, their commentary still is not very optimistic, which I think after this quarter numbers, you will see that, attrition has started cooling off. Once that starts cooling off, the margin pressure will ease substantially. So I think these are the 2 points where there is a confusion.
Okay, all right. That's an Infosys, but I just wanted to ask you about your thoughts on Kpit Technologies, that surge that we saw in Kpit yesterday after that 640 crore acquisition that they made. What about the acquisition did the street like, and how would you approach the stock? There are brokerages with a target price of around 900 on that.
See, we don't have an official coverage on Kpit, but I would say that, the R&D space is least penetrated and there is a lot of demand in that space. And also we are seeing incremental demand right now because of EPAM's fallout, because as they are not able to execute because of the Ukraine-Russia conflict. So I think once that number goes out, then probably you will have a more clearer picture. I think all the R&D companies right now are beneficiary of the of EPAM's fallout on the execution front. And so I would be a little cautious in the R&D space temporarily. It is a structurally very good story. But the likes of Tata Elxsi at 10,000 and Kpit at 650 and LTTS, all this can, correct from here in near term, because after one or two quarters, you will see the right growth numbers. And that's why we are preferring right now IT services. I think IT services, there is a lot of value even in large cap, mid cap, small cap. And that is what should be bought with a 6 to 12 months investment horizon. Definitely there is a lot of money to be made. But I would prefer IT services over ER&D right now.
Your point, Sandip, and apart from the global growth slowdown along with the Accenture numbers, the other issue that's plaguing the industry right now, which is very specific, is the moonlighting issue. We had, Wipro, ask 300 people to resign because of moonlighting, etc. So do you think these things would have any problem in the near term for all these companies with regards to employee costs or onboarding people, attrition-related issues?
No, I think it is unethical to do that. In my view, means if you should not do it, because not only from the employee's personal perspective, but I think you are handling data of two different companies and two different set of clients. So it is completely unethical. It can lead to severe losses for the companies for which the employee is working. So I think moonlighting is a real issue and it has to be addressed and it has to be stopped. So I don't think it will have any impact on attrition. The attrition in the industry is cooling off substantially because startups were taking a lot of people and hyperscalers were directly recruiting a lot of people from India, which I think has cooled off substantially. So you will see substantial relief in the quarterly attrition number when this quarter number comes, and that will reflect in margins as well. So you will see margins improving for the whole sector, and this moonlighting issue, I think, will stop in next 1 or 2 quarters.
Just a small follow-up on that one. I just wanted to understand, with the conversations that you've had with a lot of companies, etc., would you have a broad sense of what proportion of employees would be moonlighting, etc., for companies? I mean, just a ballpark, any anecdotal conversation that you've had?
So see, no company has given any number, and I
Yeah.
have not spoken specifically on that, but I can tell you that, a rough estimate suggests 1,200, 1,300 employees is max, which will be moonlighting amongst the large cap. In the small caps, you can't track them because, many of them are on subcontracting, contracting and all. So it is very difficult to put a number on that because we don't know the contractual obligations. But full-time employees on large cap should be 1,200, 1,300, which would be moonlighting. And after this incident of Wipro and all, I think it will stop. In next 1 or 2 months, you will not have any specific
I think
impact
also
on the sector.
Wipro, Rishad Premji's main angst was, not just moonlighting where you're doing work for other industries, but doing work for competitors, right? That is the big problem. I mean, how can you do that? So I guess that was the big angst that
like Sandip
he had.
said, there's going to be an absolute stop to it now,
Right.
considering what Wipro did. So that should put an end to it.
All right, that should put an end to it. And that also brings us... Yeah, please go ahead.
So I'm saying it is absolutely unethical because you are dealing with data of different clients, which is not allowed, right?
Yeah.
So it is a very serious issue.
Take your point, Sandip. Thank you so much. Always a pleasure speaking with you. Thank you for speaking on a whole host of issues with regards to IT and IT services. You do like the IT services companies from a 6 to 12 month perspective. With that, we'll step into a short break.